Hi, I'm Steven, the calculator guy, and today I want to talk about the evolution of the pseudo delta neutral strategy. So way back in the day, and I mean like a couple months ago, we talked about pseudo delta neutral strategies using things like Frankium or Tulip or Alpha Homora, where you can adjust the borrow ratio on your leveraged farms to get a long and a short that initially start the same. And from there, you have virtually very, very low risk of liquidation, but you are definitely impacted by impermanent loss. We can look at Frankium, for example. I really like Frankium. I think out of all of the original pseudo delta neutral protocols, Frankium was one of, if not the best. So let's look at Solana USDC. If we click farm here, I'll have to log into my. Okay, I'm already logged in with Phantom. Fantastic. Okay, so what you would want to do is you would want to borrow two assets and go to 75%. No, you want 75% of the other asset, Solana in this case, and you want 25% of the stablecoin. So let's say we do 1,000. Click on simulator. What you notice is you have a relatively even curve. And so what this means is it takes a lot for the price to affect your underlying, right? If the price goes down by 40%, your strategy only goes down by 6%. That's where you see the equity. So that's really good, right? And if the price goes up by 40%, your strategy only goes down by 3%. So again, that's really good. That's pretty delta neutral. And as time goes on, right, the green line, which represents your value at different price points, goes up because you're also getting yield. So this was really cool. Now, of course, there was some impermanent loss. Like in this case, even if Solana goes down by 60% after 180 days, granted the yield stays the same, you're still up by 3%. But could this be optimized? Well, the answer is yes. So instead of incurring impermanent loss constantly and just sort of having to deal with it, protocols found a way to, instead of having that impermanent loss and continuously, unbalancing your long and your short, to rebalance those constantly so that your long and short position are the same, that you are delta neutral, because that maximizes profit. Again, delta neutral just means you have a long and short position that are the same. So when you borrow an asset, you're shorting it. If you borrow and sell an asset, if that asset's value goes down and you rebuy it, you make a profit. So shorting just means that your profitability has an inverse relationship to the underlying asset, right? So if an underlying asset goes down in value and your profitability goes up, and if it goes up and your profitability goes down, that means you're shorting it. Likewise, longing it means it moves exactly with it. So if it goes up, your investment goes up. If it goes down, your investment goes down. That's a long. So you want your long and short to be the same, so that if it goes up, your short goes down, right? So if your long and short are the same, these balance out, you'll be zero. So effectively, you're just trying to get the yield. You don't care about the underlying. That's what you want with a pseudo delta neutral or market neutral strategy. You want the underlying not to matter. You don't want the assets to matter. You're not trying to get a yield, or you're not trying to play the price action. You're trying to be market neutral. You don't care if it goes up, down, or sideways. You just want to collect the yield regardless of price action. That's what I'm trying to say. Hopefully that gets through. Okay, so anyways, Frankium was really cool. You could create this strategy yourself, just like I showed you, and do pretty well with it. You're very small exposure to volatility, but still you are exposed to volatility. If the asset does fall, God forbid, 80%, you are probably going to incur a loss. Look, we could open that up once more, and just show you as an example, right? So we're back at 25%, and let's say, in 30 days, Solana falls 80%. You're going to lose 47% of your investment. If it falls 60%, you're going to lose 20% of your investment, right? It gets really steep towards the end here, or if it almost 2x's, what are we at, 106? Yeah, if it goes 2x, you're going to go down by 22%. So you still can incur loss, and that's sort of what we're trying to adjust for, what we're trying to avoid. So enter, I'm going to use Alpaca because I like the way that they depict their metrics, but I don't know if Alpaca was the first. The first that I was exposed to was Aperture, and we're going to talk about that one a little bit. I have done 2 videos on Aperture, so I don't really want to seem like I'm promoting Aperture. It's just my first exposure to rebalancing models. Okay, so you go to Alpaca Finance, you click on automated vaults, and the first thing you're going to want to do when you click on these automated vaults, let me just enter my MetaMask password. The first thing you are going to want to do, Single Finance is going to ask me to, I'm just going to do that, is cry. And you're going to want to cry because you'll notice immediately that the TVL, the total value locked in all of these, is more than the capacity. So you're not going to be able to get in. Now, a few days ago, this one was actually open. It had 25, it had like 13 million, and I should have entered it. You know, I just got greedy and I wanted to be in one of these ones. But now they are all at capacity, and I hope they open more. So anyways, these have been around for a few months. And if you got in, you are one lucky dog. So capped at 25 million. Hopefully they increase these at some point in time in the future. But let's just check out this one, right? This 234 APY. Really good looking, right? So if we click on this, what we'll see is the historical performance. Now this, wow, this is just awesome, right? So we can go back to March, and oh, they used to have the historical, yeah, here we go. So this is the historical, I mean, I can't believe this was 2021 this was available. How did we miss this? So this is, oh no, so this is just backtesting. This is backtesting, sorry. So they backtested this, and you can see even through the massive November dip, right? When November just wrecked BNB and other blue chips and virtually every coin in the market. This just kept pumping. This just kept going up through December, through January. And you can see how it's performed in what I would consider a relatively bearish market. Just kept going, doing well, going up, up, and away, right? So this is really nice. This is pretty great. You can see that the 1 week return, wow, is 2%, so annualized 105%. That's really good. Of course, this does compound, so the compounding is going to be higher than that. But it's just really quite impressive, in my opinion. And so effectively what this does is it starts off with that 75% borrow BNB, 25% borrow USDT, and that is market neutral. Now you're gonna have to trust me on that. If you want to learn why it's market neutral, you can go watch my other videos. But effectively what that does, if you're entering with the stablecoin, is it makes the long and short positions initially the same. It just, trust me, it does. And it opens up a farm position, which is really cool. So what happens, though, unfortunately, with the ones like Frankium, or the ones on Tulip, or the ones on Alpha Homora, is over time, because you're getting a yield, and the yield is either being added to one side or no sides, or you have to add it manually, you're skewing your long and your short. You're becoming less delta neutral and more exposed to price volatility. Now, what these do is every so often, so I believe in the case of Alpaca, I will have to look at the docs again. I believe Alpaca rebalances after a certain percentage price change, so I think it might be like a 10% price change, then they rebalance. But I will have to recheck. I could be thinking about a different one, which is great. So that's Alpaca. You can backtest. It looks great. It looks amazing. Let's talk about Aperture, because this is one that I know a little bit more about because I've been in it for a while. So Aperture, if you don't know, does this pseudo delta neutral strategy with synthetic stocks from Mirror on the Terra blockchain. You can invest in any of these. You're going to get around 34 to 25%. Looks like 34 is sort of the average now. The first 2 weeks you're going to get a smaller yield because it starts off just with Anchor, but you know it works its way up to that 34%. Minimum investment value is now 2,000, so I don't even think I could invest now. I have 1,000 in there. And look, I made $26 over the course of course, I can't even remember how long I've been in here. I think it's like a month and a half. And yeah, that's fine. That's exactly what I've been looking at with that 34% APR. So anyways, what this does is every 5 minutes, it checks for a price change within 20% of, might be more than 20%, maybe 20 to 40% of your minimum collateral ratio, or like 20% away from being liquidated, and then it rebalances for you. So if you start to get into dangerous ranges, it's just going to rebalance the strategy for you, and it checks every 5 minutes for that to happen. And even when the Twitter fiasco happened, I don't know if you know, but Elon Musk decided to buy a bunch of shares of Twitter. Twitter skyrocketed. Twitter is actually one of these assets here. Let's somewhere in here. But even when that happened, there were still no liquidations because the rebalancing model worked so well. So Aperture has been very useful for me to sort of understanding rebalancing mechanisms and how they work with pseudo delta neutral. I've been pleased by this particular protocol. One thing to note is that they do take a 10% performance fee, and because they're dealing with mirror, you may, if you open a position and the premium's high, you may immediately see an impact on your initial. It may take you a few days to overcome the fees and things like that before you're in the profit. But once you're in the profit, it's just smooth sailing. My total return has done really nothing but go up, which is amazing considering these are volatile assets. Okay, one more, right? I'm telling you, this is the future. So I'm just trying to expose you guys to as many protocols as I know. If you know other protocols doing this, please let me know, because this is a new type of strategy that I am certainly interested in. Because I'm looking for yields that are non-volatile. I think that the more we can find these things and share these with people, the more we can avoid the incredibly devastating impacts of inflation. What was it, 8.5% in that recent report? That's no good, right? We want to avoid that. We want our friends and family that hopefully we're slowly ushering into DeFi. We want them to be able to fight against inflation or to be safe against inflation. And I think pseudo delta neutral with rebalancing is an even stronger tool than the original pseudo delta neutral. So let's empower protocols to continue this sort of development. So single finance is another one. I've actually known about single finance for a while, but I didn't really want to talk too much about it because I wasn't totally sure how they worked, and their gas fees are pretty high. So this is on the Kronos chain, and like you might pay 25 Cro to enter a position because there's just so many mechanisms at play. It's a very, very complex smart contract. But let me connect my wallet because I know this is out of all of the protocols, single finance will like constantly ping you to switch networks. Okay, so here we go. I don't even have enough Cro to enter a position here. But how does it work? Well, unfortunately, they don't tell you exactly how it works in their docs, but they do sort of give you a basic idea. So the yellow line here is the actual price of, let's just say, being BTC, Bitcoin. So Bitcoin, as Bitcoin goes up and down, if you were in like, a basic leverage yield farm strategy, you can see as it goes down, your value does actually go in the red, right? You're not losing as much because you're not fully exposed to Bitcoin, but you are still losing a lot. But you might still make it in the profit if Bitcoin goes up. And look, Bitcoin barely peaked over your initial starting point, but you were pretty in the green, right? This is effectively what happens when you do a basic 3x, right? Basic leverage yield farming. However, if there's a rebalancing model, this looks very much like we saw on Alpaca when we were looking at their charts, right? Despite, it might make me switch to the BNB chain to see these, but in spite of the negative price action, in spite of, that November, I don't want to call it a crash, but that November bearish transition, we saw a consistent positive chart. Well, this is sort of why, right? There's rebalancing to make sure that the position stays delta neutral. And again, delta neutral means that no matter if the underlying asset goes up or down, you're really only collecting on the yield. The yield is what you care about. So you can see when the price goes up over here, because you have exposure to Bitcoin, you're going up. And when Bitcoin goes down, it goes down. Here, when the price goes way up, well, you're missing out on that yield, right? Your strategy is not going up because you're delta neutral or market neutral, which means you should really only be getting the yield. You're not really focusing on being exposed to the asset and being exposed to the market. So it's just steady going, right? Slowly getting that yield over time. And you can see at the end of this, we're up 21% versus being up 0.31%. And that's really what you're looking for. That's really what you're looking for. You're looking to get that slow grind, get that yield. I mean, I call it a slow grind, but clearly, some of these yields are not slow. If we look back at Alpaca, we saw hundreds of percents, or I think over 200% APY. In this case, you can see some of these are really high. Now, I would still hesitate with some of these more volatile ones. It's 1,900%, 700%, 2,000%. And the reason why is because most rebalancing models that I'm aware of have either a time frame or a percentage, and these can drop faster than the rebalancing models can keep up with, in my opinion. So USDC Crow, sure, I think that's cool, 100%. Like, don't get greedy, guys. 100%, that's fantastic. And Crow is definitely making its mark as a bluer chip. Crypto.com is one of the best marketers in the space. So also the Kronos chain is just pumping out protocols. I mean, MMF, larger ecosystem. Geez, have they not become a monopoly on this chain? Even single finance is now working with them. So things to consider, right? I do think the higher the APY, the higher the risk. And probably if we look back at this, right, you might have a lot of these moments where you're dipping towards the zero just because of the crazy volatility of the price action. Like, this is Bitcoin, which is considered one of the least volatile assets in crypto. So imagine, other assets. So it's just one thing to consider, right? Don't get greedy. Greed is a portfolio killer. I don't think there's really a reason to be super greedy when you can get things like 100% APY. So keep that in mind. Also, there's opportunities for lending, but the utilization rates are always going to be really high, so you may have to wait for withdrawing, things like that. 19%, that's kind of good. So that's good that the utilization is less than 95%, which means you have a little bit more ease of bringing funds out and in. So cool. All right, so we've sort of covered pseudo delta neutrals with rebalancing, why I'm so excited about it, and a few protocols that are utilizing that. I will say Delta 1 is another protocol that aims to implement similar strategies where they're delta neutral, again market neutral, so it doesn't matter if the asset goes up or down, and they have a rebalancing model. So currently these pseudo delta neutral strategies do not have rebalancing models, so they are just like effectively opening these Frankium strategies for you. And that's one thing to consider. They don't yet have the rebalancing, but they are planning on doing the rebalancing. In fact, they're actually testing the rebalancing, and there are some beta testing users like myself who will get access to that beta testing soon enough to sort of see how their delta neutral strategies are working. So this certainly isn't a comprehensive list of these, but I just wanted to expose you guys to these, and yeah, that's pretty much it. If you want to know more, if you want to discuss these things, go ahead and join the Patreon. Just, for the Discord, like, be in that Discord. We talk about cool stuff there. Really, we do. We have some developers in there. We have some crypto Twitter people in there. And it's just a cool space. I'm going to do a video on the Discord just to, like, show you guys around. Because I do think it's, like, probably the best part of the Patreon, honestly. And, yeah, that's about it. Thank you guys so much for watching, and have a wonderful rest of your day.